When the time comes where you're faced with political disruptions, is there enough money? There will be enough money. The question will be what the value of the money is and how far they can go. What are the limits to that? So this first influence, monetary policy, which is an overarching influence, and it's important to understand where we are in that cycle. Related to that cycle is also the wealth gap cycle, periods of prosperity that occur after wars, during periods of peace. There are periods of peace because there's a dominant power that no one wants to fight, and you have a prosperous period. And during those periods, there's a lot of development of credit, a lot of also expansion of prosperity and so on, technology development, and that creates wealth gaps. That's no longer the case for the most part. Today, the economy and the markets are driven by the central banks, coordination with the central government. The purchases right now of financial assets by the Federal Reserve or the purchases by the Federal Reserve of government securities are the drivers of that market. So the production of the money, if you look at money and you look at who is in the market. So the Federal Reserve, for example, will set an interest rate that for different types of creditors based on its economic objective. In the old days, let's say when we had the 2008 financial crisis, we needed to protect banks because they were systemically important, and then money market funds and commercial paper and the like. Now it's much broader than that. The whole economy is systemically important. If they didn't go out and make lending to companies, including what we call fallen angels, those that were just above investment grade and fell into investment grade, we would lose large parts of our economy. I think the important thing to understand is that there's a real economy that has a supply-demand of stuff. There's a financial economy that has its supply-demand of money and credit, and that the price of an asset will equal the risk-free return, which you can see is something close to zero, and a risk premium. So when you're looking at a bond, and let's say in the United States, Treasury bond less than 1%, or if you take a corporate bond, a good quality corporate bond, slightly more than 1%, and you look at that, or you go to other countries and it's essentially zero, that is the return that investors are getting for the risk-free return. So through history, I can take you back to the Dutch and so on. That decision that they're going to print money and buy financial assets and lend money to the government, which will also disperse money to the poor, to those who need money and the companies. That process has happened over and over and over again in history. And it means that, what do you hold during such things? You hold reflation assets. Doesn't mean inflation assets. What I mean is there's inflation in goods and services. Let's put that aside for a moment. But there's first the inflation in financial assets as those risk premiums are driven down, and that liquidity is put into the system, and there's the competition for trying to get returns. Central banks are willing to go and need to go as far as it takes in order to keep the system afloat. And because we're in the late stages where we have a lot of debt, you are going to see central banks' balance sheets explode. They have to, because the choice is the sinking ship. I've studied the rises and decline of reserve currencies because I think we're at a key moment. And I studied the rise and decline of the Dutch guilder, the rise and decline of the British pound, the rise and decline of currencies throughout history. And the track record is a perfect track record. When the time comes where you're faced with political disruptions, is there enough money? there will be enough money. The question will be what the value of the money is and how far they can go. What are the limits to that? And so when we look at the limits, we can discuss what the limits, but what are the market limits, or how does that become manifest? I can describe that. But what's their willingness to go? Their willingness to go is enough to keep order, which means acceptable economic conditions. China as a reserve currency, there will need to be an alternative. When that happens, and I think it will happen, it looks like a currency defense. What I mean by currency defense is if money leaves that asset, if those who are holding bonds don't want to hold the bonds because they have lousy returns and they're printing a lot of money and they want to go to something else, and that starts to accelerate, should that happen, then what that does is as money leaves, it puts the central bank in the position of having to decide whether it buys more bonds in order to fill in that gap, or it lets interest rates rise. I think there are three big forces that are at work that have not existed in our lifetimes before, and they are long-term debt cycle, and we've reached the part of that cycle where interest rates are at zero and monetary policy is a major driver. What this looks like in a world where we're going to print a lot of money, monetize debt, and so on. There are three stages really in monetary policy. And the cycle that we are in, the whole world cycle, began in 1945. That was the beginning of the New World Order. 1944, we established the dollar as the world's reserve currency. It was connected to gold. And then until 1971, that broke up. And so there was an arc in which central banks have the capacity to produce demand by producing credit. Just sort of hit a button and poof, and demand rises because credit comes out. But when interest rates no longer are effective and hit zero, as they did in 2008, you go to a monetary policy, which I call monetary policy 2, which is the printing of money and the buying of financial assets. China is growing, becoming powerful, playing the game in the best way it knows how. We have a different system. We're playing the game the best way that we know how. And my main issue is, how well are we playing the game? How well is the United States in that world? And then you go back to basics. And the basics are things like education. The quality of education over a period of time. Whether you are united in a common purpose. When you have a highly fragmented psychology, fragmented economics, everybody's got an opinion of what should be done, but are we actually achieving those things? And you have those kinds of problems. I worry about that in terms of the competition.